For the first time in 45 years, silver has shattered its nominal price record, screaming past $72 an ounce. So the big question is, are we just watching a short-lived spike, or is this the first inning of a massive shift that could redefine the value of precious metals? Today, we're cutting through the noise to break down the drivers behind this historic surge, and what history tells us might happen next. So, silver just went vertical, and if you're feeling a mix of excitement and total confusion, trust me, you are not alone. This isn't just another blip on the charts, it's a historic moment that's been decades in the making. For years, investors have watched silver play second fiddle to gold, but this recent price action suggests the dynamic is shifting, and fast. The problem is, when prices move this quickly, it's almost impossible to know what to do. Do you buy more? Do you cash out? Or do you just sit on the sidelines paralyzed by the fear of making the wrong call? That fear of missing out is real, but so is the risk of buying the absolute top. The mainstream media is buzzing, of course, but they're usually late to the party, leaving most investors to figure it out on their own. That's where this video comes in. We're going to give you a clear framework for understanding what's really going on. We'll connect the dots from the great gold rushes to today's market, break down the powerful forces lighting a fire under silver, and look at a key historical indicator that can help us see where we might be headed. This isn't about hype, it's about clarity. Alright, so what exactly just happened? In late December 2025, the price of silver officially smashed through its old all-time nominal high, surging past $72 an ounce. To give you some context, the previous record of around $49.95 was set way back in 1980, a ceiling that stood for over 40 years. Silver got close in 2011, hitting about $48.70, but it couldn't break through. This time is different. It didn't just tap the old high, it blew the doors clean off, launching into a completely new price range. Now, this historic rally for silver didn't happen in a vacuum. It came right after a modern-day gold rush that saw gold itself blast to new all-time highs, pushing past the $4,000 per ounce milestone. This sequence is key. In precious metals bull markets, gold often makes the first move. Then silver, which is a much smaller and more volatile market, tends to follow with even more explosive momentum. That's exactly what we're seeing now, with silver's year-to-date gains hitting a staggering 140%. But we have to add a little context here. While $72 is a new nominal high, meaning in straight dollar terms, it is not an inflation-adjusted all-time high. When you adjust that 1980 peak for inflation, it would be like silver hitting over $150 in today's money. That tells us two things. First, the 1980 rally was truly massive, and second, if the fundamentals are strong enough this time, silver could still have a long way to run just to reclaim its past glory in real terms. Look, a price explosion like this doesn't just happen. We're witnessing a perfect storm, a handful of powerful forces all converging at once to send silver soaring. Let's break down the four key drivers. First, and maybe the biggest one, is the policy shift from the US Federal Reserve. The Fed finally pivoted in December 2025, cutting its benchmark interest rate with signs pointing to more cuts in 2026. For precious metals, this is pure rocket fuel. When interest rates fall, government bonds become less attractive. At the same time, rate cuts and money printing devalue the dollar. Investors see the writing on the wall, their cash is losing purchasing power, and they flee to hard assets like gold and silver to protect their wealth. The second driver makes this rally fundamentally different from the past, absolutely exploding industrial demand. Silver isn't just a pretty metal, it's a critical industrial component. Over half of all silver is now consumed by industry, and that demand is skyrocketing. We're talking about its essential use in solar panels, electric vehicles, and all the electronics that power our lives. The AI and data center boom is adding even more pressure. This growing strategic importance was officially recognized when the US government added silver to its critical minerals list. This isn't speculation, it's real physical consumption creating a massive pull on the market. Third, we have a classic supply and demand squeeze. While industrial demand is surging, mining output is struggling to keep up. The silver market has been in a structural deficit for years, meaning we are using way more silver than we are digging out of the ground. That deficit has been growing, with the cumulative shortfall since 2021 now estimated in the hundreds of millions of ounces. When you have relentless demand, crashing into a limited supply, prices have to go up. It's basic economics. Finally, the fourth driver is good old-fashioned fear. Rising geopolitical tensions and global uncertainty have investors on edge. When people get nervous about stability, they don't run to spreadsheets and promises. They run to assets that have been a store of value for thousands of years. Gold and silver are the ultimate financial insurance. These four factors, easy money, massive industrial demand, a supply deficit, and geopolitical fear, have created the perfect recipe for a historic rally. By the way, if you're finding this analysis helpful for making sense of these wild markets, do me a favor and hit that subscribe button and turn on notifications. We put out deep dives like this all the time to keep you ahead of the curve, and you don't want to miss what's coming next. Now that we know why silver is moving, let's look at history to figure out what might happen next. And for that, we need to talk about one of the most reliable indicators in precious metals, the gold-silver ratio. It's a simple concept. The ratio just tells you how many ounces of silver it takes to buy 1 ounce of gold. For a lot of history, it was around 15 to 1. In the modern era, it has averaged between 50 and 80 to 1. When the ratio gets really high, like over 90, it's a historical sign that silver is extremely undervalued compared to gold. Leading into this most recent surge, the gold-silver ratio had been pushed to an extreme, sitting well above its historical average. This was a massive neon sign that silver was cheap. Looking at past cycles shows us a clear roadmap. After the ratio peaked following the dot-com bubble, silver went on a 340% tear between 2003 and 2008. After it peaked again during the 2008 financial crisis, silver staged an even more incredible 391% rally into its 2011 high. The pattern is consistent. Gold usually moves first, pushing the ratio to an extreme high. Then, as the bull market matures, investors realize silver is the better bargain and pile in. This causes silver to dramatically outperform gold, which makes the ratio fall. That's why people call silver gold on steroids. The recent spike in silver has started to bring that ratio down, but if history is any guide, it has a lot further to fall, which suggests silver's outperformance may have only just begun. With silver in full-on price discovery mode, the million-dollar question is, where does it go from here? Given the powerful fundamentals, many analysts see plenty of blue sky ahead. In the short term, some are eyeing resistance levels around the $75 to $80 mark. But the more bullish forecasts, like those from Robert Kiyosaki, are calling for silver to potentially hit $200 by 2026, pointing to inflation and the destruction of fiat currencies. The case for triple-digit silver is built on the idea that the market is only now beginning to price in years of supply deficits and silver's critical role in the green energy revolution. However, no market on Earth moves in a straight line, and you have to be aware of the risks. Silver is notoriously volatile. After a 140% run-up in a year, a nasty correction is always a possibility. So what could stop this train? The main risks would be a sudden hawkish pivot by the Fed back to tighter money or a severe global recession that kills industrial demand. An economic crash could slam the brakes on consumption from the solar and EV sectors, which would be a major headwind. That said, what makes this rally feel more sustainable than the speculative mania of 1980 is that rock-solid foundation of industrial demand. The world's transition to green energy and AI isn't a fad, it's a multi-decade structural shift that requires a ton of physical silver. This creates a strong underlying bid for the metal, a permanent safety net if you will, that simply wasn't there in past rallies. This suggests that while pullbacks are inevitable, the long-term floor under the price of silver may have been permanently raised. So, let's bring it all together. Silver's historic breakout past $72 an ounce isn't a random fluke. It's the result of a powerful combination of forces, a dovish Federal Reserve, unstoppable industrial demand, a chronic supply shortage, and a flight to safety in an uncertain world. While the rally has been explosive, the gold-silver ratio tells us that silver's run of outperformance might have a lot more gas in the tank. The road ahead will be volatile. There will be thrilling up days, and stomach-churning down days. That's a guarantee. But unlike past bull markets driven purely by speculation, this one is anchored by a real, tangible, industrial need. Silver is no longer just a monetary metal, it's a strategic resource for the 21st century. But now I want to turn it over to you. What are your thoughts on the future of silver? Are we watching a brief shining moment, or is this the dawn of a new era for the white metal? Drop your price targets and your reasons why in the comments below. I read every single one. And if you enjoyed this breakdown and want to keep getting this kind of in-depth, no-hype financial analysis, make sure you're subscribed. Thanks for watching, and I'll see you in the next video.